This is an overview video on the forecast, and this may be a longer video. I do have the various segments broken up into smaller, shorter videos, but I wanted to do an overview video to give you the lay of the land on the forecast algorithm, how it works, best practices, and essentially to give you what you should be doing in using the forecast algorithm and all of the capabilities that lie within the tools of the forecast algorithm. All right, so what we're going to do is we're going to start by essentially kind of showing you how the forecast algorithm works on a high level. So you've got it grouped by supplier. Now you can see that there are a couple of different orders from this particular supplier. This is Cell Accessories Limited. Right? If you scroll down, you can see another supplier and another. And what you're going to notice on this first supplier is that there are two different products that need to be ordered. And they both need to be ordered by April 6th. But perhaps we don't want to order this one, this cell wallet. If we uncheck that, then you'll see that the number changes up here in the Order All button. You check it again. You can see the number then is included in the Order All button. So if you select these buttons, you will be making a PO, a purchase order will be created for each individual item. But if you select this Order All button, a purchase order is going to be made for that particular supplier, and it will include all of the items that need to be ordered, in this case, the Cell finger strap and the Cell wallet. So if you click that button, you'll see that a purchase order is automatically generated. And the purchase order is going to include as much information as possible. And I'm not going to walk you through the purchase order because that will be a different video. But what I'm going to do is just show you that a purchase order is able to be generated from the simple click of a button. Right, the next thing that you will want to know is you've got group by supplier, but you've also got group by warehouse. Now, if you group by warehouse, it's going to give you a transfer button. Now, this transfer button is going to tell us what items need to be transferred from our warehouse to Amazon in order to stay in stock. And again, the same rules apply. And so again, you've got this transfer all button. And it'll tell you all of the items that need to be transferred from that particular warehouse. And what you're going to do is you're going to click this button, and a work order will be generated. So the difference between a purchase order and a work order is that a purchase order is an order to purchase product from your supplier, and a work order is simply instructions that you're giving to your warehouse to tell them what to do with the inventory they are receiving or the inventory that they currently have. So you'll see that it's telling the warehouse to ship items to Amazon. And the final button that you have is group by brand. Now you'll notice there's no button here for Order All, but this at least gives you a good idea of the items that need to be ordered for that particular brand. And it's just a different way of looking at things. All right, so we're going to switch back to the group by supplier button. Now, the first thing that you'll want to know is that the basis of your velocity is built upon averages. So you've got averages upon averages. So what this is doing is we're pulling data from your Amazon API, and we're getting the real data on the sales that you've been making over each of these periods of time. So you can see an average of these periods. Now, what you want to do is you want to essentially pick the time frames that you are most interested in pulling data from. For example, you may be interested in looking at a 30-day average, 15-day, 7-day, and 2-day. And what we're doing is we're pulling an average of all of those averages. Now you can see that the number over here, the adjusted velocity, that number is going to change based on what I'm selecting. You may also be interested in seeing 90-day, 60-day, and 30-day, and you may not be interested in 15-day or 7-day. And so you may want to use those days. So when you select these days and you want them to be included in your velocity calculation, they will turn green, and that's the items that you are selecting, and that is the average that you are using. So you can come and you can click on this adjusted velocity here, and you can actually make your change within here. And you can click the button that says save and apply to this forecast only, or you can click a drop down that says save and apply to all forecasts, which means that you're applying this particular setting, right, the 90-day through 15-day, that particular setting across your entire catalog. You could apply it to all the products from that supplier, or you could apply it across the entire marketplace. Now, anytime you see this particular button, you're able to make global changes to that particular setting. The other thing that's handy about the velocity is you can actually come in here and you can switch to manual velocity. So sometimes people are interested in selecting manual velocity because they want to look at some different numbers and some different projections than what the current data is offering. The other and more common use for manual velocity is when you're just launching a SKU and you're doing a product launch and you don't have the data to back up any of the velocity, but you do have data such as Jungle Scout, units, and you know that this particular product has the capacity to sell 50 units a day, and you think perhaps, you could sell 30 units a day starting out. You could actually add 30 units a day to your velocity, right? So you select your velocity, and you can do it on a SKU level, or you can do it across your catalog, like we said. And that's the basis of your velocity. But then there are all sorts of things that you can do on top of this. So I want to show you some of the things that you can do. All right, so you can see you've got this inventory timeline and you've got the calculation variables. So I'm going to show you the ins and outs of each of these. So the inventory timeline, at the very top, you're going to see the amount of inventory you have in stock. And if you click on it, it's going to give you details. So now these details show you how much FBA inventory you have, how much Amazon reserved inventory you have. And Amazon reserved is simply the FC transfer and FC processing numbers. And then it's going to show you how many customer orders you have, and it's going to reduce the customer orders, deduct them from your inventory. And finally, it's going to give you the Amazon receiving number. And this Amazon receiving number is your Amazon inbound. All right, so it's going to give you your entire calculation of what is happening based on the information that you have listed on the calculation variable side. So I'm going to remove these current items, and then you'll see that we've got every change that's made in the calculation variables is going to reflect over here. So you'll see that now we have 7 units per day is being sold. Now if you notice, we've got a couple of things that are happening on this side. So on your calculation variables, we've got the trend, right? And that's something where you can add a trend. You can look at the, a certain period of time versus the same period last year, or versus the same period, like the same 30 days versus the previous 30 days. And you can apply this to your forecast, or you can choose not to apply it. And it gives you more information and just another level of control to your forecast. The other thing you can do is you've got this additional sales growth. So in this case, we had 10%. Let's switch it back to 0. And so sometimes people like to be more aggressive, and so they want to grow their brand, and maybe they are going to be actually being more aggressive on sponsored ads. So they want to increase their order by 10%. You can add 10% in the additional sales growth section, and that's how you can easily do that. So you'll see that we removed that 10% and it switched to 6 as the daily velocity. All right, now we go to sales spikes. Sales spikes is defaulted to off. But the thing that you want to know about sales spikes, the most important thing about sales spikes is that you can actually remove sales spikes. You can remove these outliers from your calculation, because sales spikes can throw off your entire average. Right? So for example, if you're trying to order for September and you've got Prime Day sitting in the middle of your average, you'll want to remove Prime Day, right? So this here, you can see that there's Prime Day is right here. You've got 75 units that you don't want to include in your Amazon sales. But for example, you might want to include this one right here. So you can actually select which ones you want to include and which ones you want to exclude, and you can make that choice yourself on a day-by-day basis. And what it's looking at is it's looking at 150% of your average daily sales. So if you normally sell 100 units per day and then you suddenly sell 150, then that is going to be logged as a sales spike, and it's going to be something that you can actually remove from the calculation. Right, so this has 11 days of sales spikes removed. It's going to be able to remove deep discounts. Anything 30% or more is considered a deep discount, so it's going to be able to identify deep discounts, and you'll be able to remove those. Stockouts. Stockouts is one of those that it's automatically turned on. And the one note that you want to make is if you've got a very slow moving product, you want to make sure that the stockouts are turned off. So by that I mean if you've got a product that sells less than a unit a day, some of those days are going to register as stockouts. So you want to turn the stockouts off. Other than that, if you've got a normally very well moving product, stockouts is an important thing to have turned on. Otherwise, your calculations can again be thrown off. For example, if you're selling 900 units a month and you stock out for 10 days in that month, all of a sudden you have, say, 600 units in that month. Well, 600 units divided by 30, your average is going to be thrown off, and you're going to be short 300 units in your next order. But if you factor out your stockouts, all of a sudden you will have your average be correct again. The thing to know about stockouts is that we recognize stockout patterns. We are looking at your sales pattern. We're looking at anything that is 30% of your average daily sales or less, we identify as a stockout day. We want to catch the day that you ran out of stock and the day that you came back in stock. The other things that we want to check are sometimes you run out of stock, you forget to turn your listing off, and Amazon finds a unit or two and they sell it. Well, that one day could throw off your average if we're counting only whether you have inventory or not, or whether you made a sale or not. That's why we don't count a stock out as 0. We count a stock out as 30% of your average daily sales or less. So you'll see that we can catch stock out patterns like this one, where there were 2 units that all of a sudden Amazon sold. So you ran out of stock, you had zeros, Amazon found some extra units and sold them on this day right here, and then you came back in stock on this day. So that's how we calculate the stock outs. Again, we don't look at just inventory, we look at a sales pattern. The other thing that is very important to note is that this will actually catch for you when your listing is suspended. So that's very important, because if we're just looking at how much inventory you have in stock, we would never catch listing suspensions, because you might have 1,000 units in stock but be suspended and make 0 sales, and then all of a sudden that suspension period throws off your entire average. So it is very important to know if you're thinking about or looking at a stock out on any sort of inventory management software, you have to know how a stock out is being counted, because you might miss things like suspensions if the number of units in stock is the only yardstick for calculating a stock out. So again, we can catch suspensions and we can catch true stock outs, and you want to turn your stock outs off if it is a very slow moving product. Lastly, in this section, you have your MCF transfers, multi-channel fulfillment sales. So this is something that you might want to come in and turn on. This is a turn off or turn on sort of feature. And what this is it includes any sales that are fulfilled by Amazon that are sold from another platform or are considered non-Amazon sales. So you may or may not want to include these. What it's going to do is it's going to include anything that you sell. It's going to call them sales and include them as part of your velocity, right? All right, now we go to buffer stock. Buffer stock is a pretty cool feature in that it's like a false zero. And what it does is it tells you to purchase or to transfer inventory before you run out, before you hit that number. So we've got it set to 500. So you can see that the transfer is arriving before I hit 500. Now, if I changed this to 400, my transfer time is going to change. So you can see when I scroll down that it's now at 400. The transfer that I'm being instructed to make is occurring before I hit 400 instead. So your buffer stock is simply a false zero, a protection. It's kind of like my husband likes to say, when your gas tank hits low fuel, you still have a little bit of gas in the tank to get to the gas station. All right, buffer stock is very similar. It will tell you to order and will instruct you to order and always have enough inventory in your warehouse. So all of the orders will be made before you run out of your buffer stock. And your buffer stock is that amount that you have there just in case for a rainy day, for an emergency. It's always there. And now, if you ever have any questions about any of the calculations that are occurring, what you want to do is you can click on these calculators, and it'll actually break down your entire calculation so that you understand why you're being told to order the amount you're being told to order, right? So that's the basic gist of your forecast. You can export your forecast to Excel. You can get information by exporting to Excel. The last thing I want to point out, you've got a transfer time here. Actually, two things. You've got a transfer time here. The transfer time is how much time it takes to transfer from your warehouse to Amazon. We default this to 10 days, but you can change this, right? Maybe there's particular SKUs that are 15 days. Or maybe, as we have been, if you're receiving certain delays, maybe during the holiday season, you change it to 20 days and you change it across the entire catalog, right? Save and apply to all products, right? So that's transfer time. The last thing is express lead time. And I have another video on express lead time. So I'll just be very brief and I'll just tell you to go ahead and check that out. But essentially, what this is going to do is going to calculate. You can choose a faster lead time. So you've got your ocean freight lead time, and maybe you have a shorter lead time that helps to calculate air freight. So now you know if you ever have to air freight anything, if you're running low on inventory, say for example, you're running low on inventory, what you want to do is you want to have the system calculate for you how much you have to send by express and how much you have to send by ocean freight. And it's going to do the entire calculation for you so that you don't have to spend all that time figuring out for yourself what your air freight calculation needs to be. Two final things that we'll go over. We've got these future seasonal sales spikes. This is where you do all of your planning. So if you know that starting at the end of November and going through, let's say, December is your Christmas season, right? You can calculate, and you know that you've got your Christmas season, you do 200% of your normal sales. And let's say you've got an Easter period, right? You make Easter sales. And for Easter, you do double the sales that you normally do. You can start building all of these holidays into your algorithms, and then it'll start calculating. So if you see here, you've got 12 units. It's adding that 100%. It's doubling your sales for that time period that you have listed as your Easter sale. Similarly, if you've got lightning deals planned, or if you've even got email blast, if you've got an email blast that you're planning on doing, say on the 23rd, and you say it's going to go from the 23rd to the 25th, you can apply an email blast and you think you're going to sell 200 units. And then you've got a lightning deal at the end of the month. And for that lightning deal, you think you're going to do 500 units. It's going to add these to your calculation, and it's going to adjust your shipment recommendations. You can see right here the express orders have shown up, and your lead time, your default lead time order recommendation has increased because you've added additional planning. And so the system is going to calculate that additional planning and keep it in mind. And you can see here with this seasonal, or with this lightning deal, it'll show up here, and then this email sale that you're going to do over the period of 3 days will show up here. So all of this allows you to do a lot of advanced planning and to calculate your exact needs so that you don't have to worry about calculating it on an Excel spreadsheet. So that is the basic gist of how the forecast algorithm works. If you have any questions, feel free to reach out. You can go through this help button to the ask. And you can just reach out. And if you have any suggestions, feel free to let us know. We always strive to make this the best possible software we can. And we love listening to and collaborating with our Amazon sellers, but that's the basic gist of how the software works, and we hope that you enjoy it and that it really streamlines your processes.